Alright, let's dive into something that's got a lot of Aussies on edge right now, the housing market. And no, I'm not talking about the usual debates over avocado toast or whether Sydney's prices will ever come back down to earth. This is bigger. We're looking at a potential $2.2 billion wipeout for over 34,000 Australians, mostly first-home buyers, who are now at risk of falling into negative equity. But here's the thing. This isn't just about numbers. It's about dreams, risks, and the fine line between opportunity and disaster. So, let's break it down. First off, what's negative equity? It's when your home's value drops below what you owe on your mortgage. Sounds scary, right? And it is. Especially when you consider that many of these buyers only put down a 5% deposit. Personally, I think this is where the story gets really interesting. A 5% deposit scheme sounds like a lifeline for young Aussies trying to get onto the property ladder, but it also means they're starting with almost no buffer. If the market dips, which it has, by $230 billion in just 4 months, they're immediately vulnerable. What many people don't realize is that this isn't just a housing issue, it's an economic one. If these buyers are forced to sell at a loss, it's not just their savings that take a hit. The entire economy feels it. Cameron Cusher, an independent property economist, points out that while unemployment is low now, if it rises and property prices keep falling, we could see a cascade of forced sales. That's when things get ugly. It's like a domino effect. One sale at a loss can drag down neighboring property values, creating a vicious cycle. But here's where it gets even more complicated. The government's 5% deposit scheme has effectively put taxpayers on the hook for $11 billion in liabilities. In my opinion, this is a double-edged sword. On one hand, it's helped over 260,000 first-home buyers get into the market, which is no small feat. On the other hand, if these buyers default, it's not just their problem, it's ours. Taxpayers could end up footing the bill for a policy that was supposed to help, not hurt. Now, let's talk about the bigger picture. The housing market slump isn't happening in a vacuum. It's driven by tax changes, high interest rates, and a flagging economy. But what's really fascinating is how this connects to broader trends. For decades, property has been seen as a surefire investment in Australia. Safe as houses, they say. But if you take a step back and think about it, this crisis is a wake-up call. It's a reminder that even the most stable-seeming markets can turn on a dime. And when they do, it's often the youngest, most vulnerable buyers who get burned. One thing that immediately stands out is the political blame game. The coalition is accusing Labour of pushing young Aussies into bigger mortgages while planning new housing taxes. Labour, meanwhile, is playing down the fears, insisting their policies are helping first-home buyers. From my perspective, this is classic political theater. Both sides are partly right and partly wrong. The 5% deposit scheme did get more people into homes, but it also exposed them to massive risk. The question is, was it worth it? What this really suggests is that we need a more nuanced approach to housing policy. Personally, I think the focus should be on affordability, not just ownership. If we're going to help young Aussies get into the market, we need to make sure they're not just buying a ticket to financial ruin. That means addressing the root causes of high property prices, like supply shortages and speculative investing, not just slapping a Band-Aid on the problem. Finally, let's talk about the human side of this. Imagine being a first-home buyer who's just taken on a $600,000 mortgage, only to realize 6 months later that your home is worth less than what you owe. That's not just a financial blow, it's an emotional one. It's the feeling of being trapped, of watching your dream turn into a nightmare. And that's what makes this story so compelling. It's not just about numbers, it's about people. So, where do we go from here? In my opinion, the key is to strike a balance. We need policies that support home ownership without exposing buyers to unacceptable risk. We need a housing market that works for everyone, not just investors or developers. And most importantly, we need to stop treating property as a guaranteed path to wealth. Because as we're seeing now, that's a gamble, and sometimes the house always wins. What do you think? Is the 5% deposit scheme a lifeline or a trap? And what should the government do next? Let me know in the comments. Because this isn't just a story about the housing market. It's a story about us and the choices we make for our future.